But I think this is one of the great questions in physics and philosophy, is where are the aliens? Maybe they're among us, I don't know. Some people think I'm an alien.
As of last Friday, this man has surpassed the wealth of Warren Buffett. Elon Musk is now the 7th richest man in the world. If all you know about Elon Musk is from interview soundbites,
everyone in this room is inspired by you. Who are you inspired by?
Well, Kanye West, obviously.
tweets, or memes, then you probably have quite a strange image. Personally, I am fascinated by Elon, and I really want to see his grand mission succeed, or I guess at least one of them anyway, which is to revolutionize our relationship with our vehicles and with energy. And I'm actually fairly confident that it will succeed and that it'll probably even exceed everybody's expectations. But as of today, as of this recording, I'm currently not an investor in Tesla. And today I'd like to tell you a little bit about how those two facts actually coexist for me. Commission-free trading via apps like Robinhood alongside large online investment communities like Wall Street Bets have contributed to the rise of something quite spectacular to behold: the meme stock. A meme can be defined as an element of a culture or system of behavior that may be considered to be passed from one individual to another by non-genetic means, especially imitation. When this system of behavior based on imitation gets passed from one individual to another in the stock market, you can quickly see the share price of a company rise based off of sheer hype and the loyalty of a cult following who's in on the meme. In other words, you'll see a stock chart that looks like this. And sometimes afterwards, it'll look like this. Just how much hype can really be generated this way? Well, Wealthsimple actually released a really interesting report breaking down the data behind Tesla trading volume on their app. What they found was unprecedented. Between the days of February 3rd and February 7th of this year, out of all US dollar trades on their platform, 40% of those were to trade Tesla. That's almost half. And look closer at the chart. You can see Tesla relative to the next most traded companies. Not even close. On top of that, there's actually this really handy website. It's called robintrack.net. And basically what it does is it pulls data directly from Robinhood and lets you see trends in popularity of the stocks that people are trading. So on Monday, July 13th, nearly 40,000 Robinhood users bought Tesla in just 4 hours. And it's currently the 10th most popular stock on the platform as well, even above a stock like Amazon. And take a look at this chart. The purple line shows the stock price and the green line shows how many people own the stock. They've both increased very dramatically in the last few days alone. But something to keep in mind here is that Robinhood also offers fractional shares. So although 40,000 Robinhood traders came in those 4 hours, it might have not been that many shares that actually got traded, and also it's commonly thought that retail investors don't move the market nearly as much as institutional investors. But for me, what this really illustrates is the kind of psychological behavior of especially new investors when they interact with a stock like Tesla. So basically what I'm saying is that Tesla is all hype, is just a meme stock, and has no actual substance behind it, right? Well, no, not exactly anyway. Its memeability and its loyal fan base do certainly play a role, but there's actually a really compelling story behind Tesla, and there's also a few relatively unknown facts that are acting as kind of a runway of good news for the company that I'd like to take you through right now. The first factor has to do with these shorts. Yes, these shorts. Short shorts, in fact. These red satin garments with sexy emblazoned on the back basically capture the essence of Tesla and Elon Musk. And that's because they give a big old to naysayers. In this case, Tesla decided to create and sell these to make fun of short sellers. For those of you who are new to investing, a short seller is someone who's betting against a stock, meaning they'll make money if the stock goes down and lose money if the stock goes up. Tesla is actually set to break a record for the largest amount of money shorting a single stock. There's about to be 20 billion, yes, billion with a B, dollars of money betting against Tesla. Because this amount of money shorting the stock is so large, it can create a phenomenon known as a short squeeze. A short squeeze occurs when investors decide to short a stock. Remember, that means bet against the stock. But then the stock actually goes up, and let's say by a lot in this case. So now there's a lot of pressure on the shorters of the stock to close their short position before they lose more money. Hence the term squeeze. They're being squeezed by this pressure. But in order for a short to close the trade, they'll have to buy back stock. And this buying of the stock then actually adds further to the demand of the stock, which drives it up even more. So with a record amount of people shorting this stock, Tesla is yet again poised to deliver a really big short squeeze. And the fact that Elon Musk is distributing and creating and selling these shorts it's actually really funny, because he's basically just poking a huge joke at the short sellers of this stock. And I have to say I'm a pretty big fan of it. The reason why there's so much money betting against Tesla stock is because it defies all traditional metrics whereby stocks are valued. But I think relying simply on traditional measures of value is a huge mistake shorts are making. We live in an unprecedented time where the power of social media allows hype and loyal followings to build like never before. And the people who know how to leverage this, like Elon when he calls Jeff Bezos a copycat, will reap the rewards, while people who cry, "The stock is overvalued," will get burned. The second piece of information that could be really positive for Tesla is the possibility that it's going to be added to the S&P 500 index. If you're not familiar with the S&P 500, it's basically a group of about 500 of the largest companies in America, like Apple, Amazon, and Microsoft. And this 500 group of companies is kind of used as a gauge to measure the overall health of the stock market. So being added to this group of companies is prestigious in its own right, but that's not really why it's necessarily important. Studies have shown that being added to an index like the S&P 500 has a positive effect on the price of a stock. So multiple studies have been done on this subject where they look at what happens when a stock gets added to an index, and they do find that there is a positive correlation between this and the share price increasing, but ultimately the common thread seems to be in these studies that the stock price is only a temporary short-term increase, and that it's probably due to the excitement around the announcement itself. So long-term effects aren't necessarily going to be a factor here. On top of that, at the beginning of July, Tesla actually surpassed Toyota to become the most valuable automobile manufacturer in the world. Yep, that's right. Tesla is worth more than Toyota, Ford, GM, all of them. And yet, it's not like everyone is driving around in a Tesla, or that the company is even making a lot of profit. So how does this make sense? Well, there's actually a lot about Tesla's long-term plans that most people don't know about, but I didn't really want to dive too deep into that in today's video, because I'd honestly like to make an entire video just for that if you guys would be interested. So if you are, please like this video and leave me a comment to let me know that you guys would be down for something like that. So interesting enough, I actually used to work for a global mining company, and one of the main minerals that we actually mined was nickel. And guess what's a major component of electric batteries? Nickel. So my company was actually really interested in the rise of electric vehicles, and our strategic marketing department actually spent a lot of time studying this trend. And it turns out they were actually modeling some very strong predictions for the adoption of electric vehicles just within the next few years. Looking back on this now, it was cool to see how companies that were kind of on the side of the electric vehicle revolution were the ones who were predicting it earliest. because they were poised to really capitalize off of it by producing important materials used in the car. Before I left, I know that my company was very optimistic about electric vehicles and were planning on making a lot of money off of that nickel. So take that for whatever it's worth. So with all this momentum behind Tesla and more good news on the way, as well as its possibility to achieve its grand vision, why am I not investing in Tesla? Well, simply put, it just doesn't fit with my investment philosophy, which is to hold a broadly diversified basket of global equities. And I mean, sure, by being very disciplined and being a real stickler with my rules about my investment philosophy, I'm going to miss out on a lot of gains and a lot of stocks like Tesla. But at the same time, I'll be virtually certain to experience a solid positive return on my money, and I won't be exposing it to uncompensated risk at the same time. But with that being said, I personally don't really see anything wrong with allocating a small amount of your portfolio, something like less than 10%, to more high risk, high reward stocks that are even a bit fun to kind of speculate on. I mean, I used to trade both stocks and options, so I know how rewarding and fun it can be to actually pick the right play for a certain move. There's definitely a sense of accomplishment in that, as well as a profit too. One thing I found really interesting about Tesla is how well it exemplified the idea of expectations when it comes to investing. Let's say that we had a scenario that had two outcomes, outcome A and outcome B. Let's then say that we had a group of people try and guess which outcome would occur. Okay, so it looks like most people are expecting outcome B to occur. But then let's say that it's revealed that outcome A was actually what happened. Well, now we have a large amount of people who have to shift over from outcome B to outcome A in order for them to be in line with reality. Now let's replace outcome A and outcome B with Tesla stock going up and Tesla stock going down. If a large amount of people are expecting Tesla stock to go down, let's say these are just investors on the sideline who either think Tesla is overvalued, or maybe they're waiting for a cheaper price to buy in, or maybe they're even shorting the stock. When Tesla actually ends up going up, a large amount of these people will probably have to shift over and end up buying the stock because they were wrong and they don't want to be wrong. The lesson to learn from this is that when it comes to expectations in the stock market, oftentimes the greatest opportunity is in being the contrarian. And that's because stocks react the most to unexpected information. They don't really react to expected information because it was already priced in. So if you're already on the side of the unexpected, then you're also poised for the greatest reward before everybody else catches on and joins you. But you're also taking on a lot of risk due to that uncertainty. And this is exactly what early Tesla investors did even just a few years ago. They took on that risk of massive uncertainty, but they also bought in way before everyone else, so they were kind of on the side of the unexpected and the contrarian. And as of right now anyway, it's paid off really well for them. But who knows what's going to happen next? And so even though today a lot of the stuff I've shared with you guys is normally outside my main wheelhouse of my general investment philosophy, I still think that Tesla is an extremely interesting story and that Elon Musk is a pretty amazing guy. And I mean, at the end of the day, I just want to be able to empower you to make your own decisions. So I would just tell you to take what you found valuable today and leave the rest. I'm Steve Antonioni, and this has been Cash College on Tesla. If you enjoyed today's video, please give it a like, subscribe if you're not already, and thank you so much for watching. I will see you again soon.